Here in this video, we will go over everything you need to know heading into Nvidia earnings, and then in the next video coming out later tonight, we will go over exactly what happened with Nvidia earnings, and I will give you my expectation for Nvidia as well towards the end of this video. But let's start off with this clip. What to expect from Nvidia earnings that just aired on CNBC. I thought you guys should probably hear it as well.
Now, on what to expect is Joseph Moore, Morgan Stanley semiconductor analyst. Joseph, good to have you this morning. I guess the real question is we have the published consensus out there for what, maybe $5.60 a share for the quarter, and then we have what's embedded in investor expectations. Where do you think the bar sits at this point?
Good morning. I think expectations are higher. I think this is a transitional phase, right? We're looking at Blackwell that'll start shipping around the August timeframe. And so we're looking at Hopper driving business. And I think a month ago, there was expectations that there might be a little bit of a pause given how much enthusiasm there is for the next generation product. We're not hearing that. And generally, the market's seeing that it's pretty strong. I would tend to agree. And I think that there will be material upside around the quarter and the outlook. But importantly, I think that the market is also looking to next year with a little bit more enthusiasm, given that we've heard from some of the big hyperscalers that their spending will persist into next year, that we do have a big product cycle. So we are sort of setting up for something bigger that's coming. And I think this should be both a good quarter and one that gives people a sense of enduring growth beyond that.
So you don't think there'll be some kind of a pause or a stutter step in sales based on this product transition, despite what we heard reported about AWS's intentions here?
I mean, there certainly could be. It's not out of the realm of possibility. Blackwell is about 2.5 times as powerful, more so in some workloads, and will probably be 20 to 30% more expensive. So you could certainly see people deferring. But I would say we're not seeing that right now. We're seeing very strong demand for the Hopper products, certainly into the July quarter when we don't have any Blackwell. And then once we have Blackwell, it'll be the minority of products, but we'll be back in a very tight allocation situation for those products. And so right now, I don't actually anticipate a pause. It's certainly possible that one could evolve. I think the Amazon thing was a bit of a misread of the transition to this Blackwell. Something that NVIDIA had talked about quite a bit is that the initial effort to do the Grace Hopper product has sort of transitioned into a Grace Blackwell product. And so it's not really a cancellation per se. It's a very strong ramp that we would expect next year around Grace Blackwell, to the extent that Grace Hopper was a small ramp. That's something that's been understood for a while. So just from that look, but I think in contrast to last year, where we knew near-term numbers were good, but there was some sense of, what's next year look like. We now have pretty good visibility into next year because we've heard from the big customers and we have the product cycle. So I think it's, if there is a pause, it wouldn't be the end of the world. I don't think it would be really a reason to pull away from the stock. But as of right now, I don't anticipate that there will be one.
Yeah, you mentioned a couple of times. I mean, the durability of the demand has been the main question, I guess, for a while, because you could see they were in shortage for so long, and obviously there wasn't enough product to go around. But I mean, just exactly how much investment capacity does the industry have to maintain NVIDIA's, growth rates? Obviously, it can't continue at the current growth rate. It's going to be $112 billion in revenue this fiscal year. It's up by 4x in the last few years. But I guess how do you see it unfolding over the next couple of years?
Yeah, I mean, look, they've done a remarkable job, both the demand side and the supply side. And you mentioned that there had been shortages. Those shortages have been easing, which was created some consternation for the stock earlier in the year. But the reality is there's just other shortages. We're dealing with power and rack space and sort of places to put these things. That's more of the binding constraint, still growing quite a bit. But NVIDIA's supply had been outgrowing that. So I think those shortages had been easing. But I think that there is quite strong demand. And then I think if you look at the hyperscale comments, in January, we got some confirmation. We kind of heard that spending would be more like what's in the NVIDIA model versus what previously had been lower. But then in the April quarter, or the April earnings period, we actually heard quite a bit about hyperscale companies continuing that spending into calendar 25. Mm-hmm. And there were multiple instances of those companies talking about not just how much they're investing, but the enthusiasm that they have for the returns on that, even though those returns aren't really apparent yet. Like we're sort of still seeing the business models evolving for AI, but the enthusiasm for that investment to endure into next year is pretty significant. On top of that, the Blackwell product will be a significant value, will probably help them deal with kind of any potential market share concerns, and there could be some pent-up demand for that product once it starts to ramp. So, I think the view of 25 is pretty good. There's still questions as to, this has become such a large portion of cloud CapEx. Yeah. I would definitely expect some deceleration over the course of calendar 25. But for right now, things are really strong.
So that's a very important side of Nvidia earnings as well. What is demand going to look like throughout the rest of this year? Will there be a slowdown or some kind of pause as we head into next quarter, which the quarter that we are currently getting reported is Q1. Q2 is right now. We're not really expecting a pause for Q2. Like, why would there be a pause right now? There's probably not. Q3 could be the bigger problem, that maybe we start to get some kind of pause or moment in time where companies try to transition to the Blackwell. They stop ordering as many of the, H100s, the Hopper chips, and that could become problematic. Now, 2025 is going to be very important as well. If we get more clarity or confirmation that demand is continuing at the same pace, if not a stronger pace, that is really what the stock needs to hear right now. I think to a certain degree, you've already priced in all of the good news plus some. Just think about it like this. Nvidia from the end of April went from $750 per share back to $950 per share, nearly a new all-time high. Right before earnings, the stock has rallied $200. I am pretty confident in saying Nvidia is probably not going to have a huge up day. Now, could it? Of course. And if it does, it will be really if, Jensen Huang provides more solid insight to expectations for 2025. Right? The markets are always forward looking. So next quarter will be important, but the quarter after that and the quarter after that will also be important as well. If Jensen Huang doesn't exactly provide clarity on what those upcoming quarters could look like, that's where you get potentially an even steeper sell-off. I do think if Nvidia meets expectations and meets expectations on guidance, well, I should say meets expectations for revenue, for EPS, for margins, and for next quarter guidance, you do likely still see a sell-off in the stock. You likely do see a 3 to 5% down day coming tomorrow. Now, if Nvidia outright misses, you probably get a 10 to 15% pullback. If Nvidia beats, you probably get a 1 to 3% pullback. Now, again, who knows exactly what's going to be said. I'm only just, speculating here, right? But if we do get a meet, which I think is the base case scenario at the bare minimum, we meet expectations on Nvidia, then you do probably see a broadening out of our markets. That probably does give the markets confidence to put money to work in other areas of the markets, right? And that could be very bullish for other areas, for maybe your portfolio if you're in other stocks besides just AI. Big tech name. Now, it is pretty interesting though. Nvidia options are pricing in about an 8 to 9% move higher or lower. That is pricing in the biggest market cap move you have ever seen in the history of a single stock on any given day. So you're pricing in a massive move, like $290 billion or so. But the S&P and the NASDAQ are not pricing in that much. The S&P and the NASDAQ are pricing in about a 1% move heading into next Friday. So you're actually not pricing in that much by the broader markets, which will be interesting if we do get a broadening out of our markets or a sell-off. That's maybe where some of the opportunity could be to hedge out your position if you're in Nvidia, or potentially trade the upside or the downside if you just want to trade the earnings. Nvidia option activity today by big money is quite positive. You have seen 11 orders totaling $14.48 million with a positive order value of 97%. Take a look at this, right? Calls open interest is 91%. Put open interest is 9% for this Friday. That's insane. For next Friday, 84.5% calls, 15.5% puts. You are so bullish right now on the options chain that the market makers that are going out and, selling those options, they also have to go out and sell stock, right? Or buy stock when those calls go up. If the stock falls or trades sideways, then you see market makers that can actually go out and sell stock to de-hedge those positions. So when you are this bullish on the options chain, if you do start to see a fall, okay, then you can start to see market makers go out and sell stock to de-hedge all of the calls that they have already hedged, right? Because if you buy a $1,000 call, let's say for an example, or $900 call on Nvidia, let's just use that for, whatever price you paid, say $5 a contract, $500 a contract. Well, if the stock goes above $900, you start to make money. Market makers, they typically take the back end of options about 90 to 95% of the time because that's a lot of risk you open yourself up to. That's a lot of, position management. That's a lot of, capital you need to play the role of a market maker. So a lot of firms do not like to do that. So the market makers do that. Well, if you make money, if you buy a $900 call and the stock now is at $950 or $1,000, okay, great. What do the market makers have to do? They have to go out and they have to buy stock at, let's say, $899. So when you exercise your options, you get the stock at 900. Market makers still make a little bit of money by being the market maker, right? So the market makers have to buy shares below your strike, right? Imagine it like this now. Let's say Nvidia falls to $850 after earnings. Well, now the market makers have all of this stock they don't need anymore. So as the stock falls, gets closer to, $899 where the market makers bought, they can start to sell stock and ride the stock lower. So when you're this bullish, from my experience, you're almost guaranteed to fall after earnings. Now, that's not a recommendation. That's not a guarantee. But I would say there's probably a 90% chance that the stock falls and a 10% chance the stock rallies after earnings. Judging off of the high expectations, the uncertainty we may or may not hear towards the end of this year, if not 2025, and the transition from Hoppers to Blackwells by different companies, and the just outrageously bullish options market we are seeing with Nvidia right now. But again, if Nvidia meets expectations, it could sell off and the rest of the markets could rally as that, couple $100 billion goes into other areas of our markets, maybe under invested areas of our markets. If you're invested in something like a PayPal or a Tesla or, small mid-cap stocks, maybe those stocks could actually benefit from Nvidia meeting expectations and selling off. If you get a miss on Nvidia's earnings, well, everything's kind of going to sell off, right? That's pretty self-explanatory. If you get a beat, well, maybe that could just help broaden out the markets as well as a meet. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel if you made it to the end of this video. You guys have a fantastic rest of your day, and I will see you in the next one.